Have you ever thought about investing in the USA? If yes, then this video is for you. The land of opportunity, the United States of America, offers a diverse landscape of investment possibilities. From the bustling stock markets of Wall Street to the vast expanses of real estate, there's something for every type of investor. Imagine owning a piece of an up-and-coming tech company. Or perhaps you fancy becoming a landlord to a string of properties across the country. Maybe you've always dreamed of owning a small business serving the local community. The beauty of investing in the USA is that you're not limited to just one option. The potential benefits of investing in the USA are substantial. It could lead to significant financial rewards, providing a solid foundation for your future or a comfortable retirement. So whether you're a seasoned investor or just starting out, the USA has something to offer you. Investing in the USA could potentially bring you significant financial rewards. Before diving into the specifics, you need to understand the basics of investment. Imagine investment as a journey. Now, every journey requires a map and some basic knowledge of the terrain. The landscape of investment is no different. It's defined by three key landmarks: risk, return, and diversification. Risk, in investment terms, is the chance that the actual returns from an investment will be different from the expected returns. It's the uncertainty, the potential for loss, and it's an inherent part of investing. If you're going to invest, you have to be comfortable with some level of risk. Return, on the other hand, is the gain or loss made on an investment. It's the reason why we invest in the first place, right? We want our money to grow. But remember, the potential for higher returns usually comes with a higher level of risk. Then there's diversification, the strategy of spreading investments among different types of assets to reduce risk. Think of it like not putting all your eggs in one basket. By investing in a variety of assets, you can potentially offset losses in one area with gains in another. But understanding these principles isn't enough. You also need a clear financial goal and a plan. Are you saving for retirement, a new home, your child's education, or just building wealth? Your goal will dictate your investment strategy, and your plan? It's your roadmap outlining how you'll reach your financial destination. It should factor in your income, expenses, savings, and risk tolerance. So, to recap, risk, return, and diversification are the fundamental principles of investment. They're the terrain you'll navigate. Having a clear financial goal and a plan is like having a map and a compass. They'll guide you on your journey. Understanding these basics will set the foundation for your investment journey in the USA. Next, you must be aware of the regulatory environment in the USA. Navigating this complex landscape can seem daunting, but don't worry, we're here to guide you through it. In the grand tapestry of the American financial system, regulatory bodies play a crucial role in maintaining order and fairness. At the forefront of these organizations is the Securities and Exchange Commission, or SEC, as it's more commonly known. The SEC is a guardian of sorts, ensuring that the public is provided with reliable information and that our markets function transparently and fairly. To put it simply, the SEC is the referee of the financial game. They set the rules, call the fouls, and make sure everyone plays nice. But what does this mean for you as an investor? Well, when you choose to invest in the USA, you're agreeing to play by these rules. Compliance with regulations isn't just a suggestion, it's a requirement. This means understanding and adhering to the rules set out by the SEC, from accurate reporting and disclosure of information to ethical conduct. But wait, you might be thinking, what happens if I don't comply? The consequences of non-compliance can be severe. We're talking penalties, fines, and in some cases, legal action. This isn't meant to scare you, but rather to emphasize the importance of playing by the rules. Think of it this way, compliance isn't just about avoiding penalties. It's about ensuring your investment is safe, secure, and above board. It's about building trust in the system and contributing to a fair and stable market. So how can you ensure compliance? Start by familiarizing yourself with the SEC's regulations. Their website is a treasure trove of information. Secondly, consider seeking advice from financial advisors or legal professionals. They can provide valuable insights and help steer you clear of potential pitfalls. In conclusion, navigating the regulatory environment isn't just a step in the investment process, it's a continuous journey. But remember, you're not alone on this journey. There's a whole community of investors, advisors, and regulators ready to help. Navigating the regulatory environment is crucial to ensure your investment in the USA is legal and protected. Remember, When it comes to investing, playing by the rules isn't just the right thing to do, it's the smart thing to do. Now that you understand the basics and regulations, it's time to choose the right investment for you. The world of investment is a vast one, with a plethora of options to choose from. Each investment type comes with its own set of potential returns and risks, and it's essential to familiarize yourself with these before diving in. Firstly, we have stocks. When you buy a company's stock, you're buying a piece of that company, becoming a shareholder. Stocks can fluctuate dramatically in value, which means they can be high risk but also high reward. Next, we have bonds. These are essentially loans you're giving to a company or the government in exchange for periodic interest payments and the return of the loan amount at the end of a fixed period. Bonds are generally considered lower risk than stocks, but they also typically provide lower returns. Then there's real estate, where you purchase property to rent out or sell for a profit later. It can provide steady income and potential appreciation over time, but it also requires significant upfront capital and carries risks like property damage or market downturns. Lastly, mutual funds and exchange-traded funds, or ETFs, allow you to invest in a diversified portfolio of stocks, bonds, or other assets. They're managed by professionals and can be a good option for those seeking diversification and less hands-on management. But how do you decide which is right for you? It all comes down to your financial goals and risk tolerance. If you're saving for a long-term goal like retirement, you might lean towards riskier investments like stocks that have the potential for higher returns. If you're risk-averse or saving for a short-term goal, safer options like bonds might be more suitable. Remember, there's no such thing as a perfect investment. Each has its pros and cons, and what works best for you might not work for someone else. It's all about finding the balance between risk and reward that aligns with your unique financial situation and goals. Choosing the right investment is a crucial step in your investment journey in the USA. Once you've chosen your investment, the next step is to actually make the investment. Now, let's dive into the process of making an investment in the United States, which is a road paved with opportunities and potential pitfalls alike. The first step in this journey is to open a brokerage account. This is your gateway to the world of stocks, bonds, and other financial instruments. Choose a reputable brokerage firm and make sure you understand their fee structure and the services they provide. Once the account is set up, it's time to buy. Whether you're buying stocks, bonds, or other securities, the process is similar. You'll need to decide how much you want to invest, identify the security you want to buy, and place an order. Remember, it's important to diversify your investments to spread the risk and potential for return. But what if your chosen investment is real estate? The process is different, but the principles are the same. You'll need to identify a property, secure financing, and close the deal. Again, diversification is key. Consider investing in different types of properties and in different locations. Now, here's where the real work begins. Once you've made the investment, it's essential to monitor it regularly. This is where you'll see the fruits of your labor, or perhaps the need for adjustments. Keep a close eye on market trends, economic indicators, and news that could affect your investment. Making adjustments is not a sign of failure, but rather a sign of savvy investing. Perhaps your stocks have not performed as expected, or maybe the real estate market has cooled. In such cases, don't be afraid to adjust your portfolio. Sell off underperforming assets, buy into promising ones, or simply hold on and wait for the market to rebound. Remember, investing is not a one-time event, but a continuous process. It's about making informed decisions, staying committed, and being flexible when necessary. Making the investment is the final step in your investment journey in the USA. Yet it's also the beginning of a new chapter, one filled with possibilities, challenges, and hopefully substantial returns. So ready to make your move? Now, you are equipped with the knowledge to start your investment journey in the USA. We've covered a lot of ground today, and it's important to remember the key points we've discussed. We've delved into understanding the basics of investment. It's not just about making money, but about growing it strategically and sustainably. We've explored the regulatory environment, a crucial aspect that ensures your investments are legal and protected. We've also talked about choosing the right investment, a decision that should be based on your financial goals, risk tolerance, and investment horizon. Remember, there's no one-size-fits-all in investing. What works for others may not necessarily work for you. Finally, We've tackled the actual process of making the investment. It's not as intimidating as it sounds, especially now that you have the knowledge and tools to help you navigate this journey. With careful planning and execution, investing in the USA could potentially bring you significant financial rewards.